Hi everyone, what are you doing? Hope you're doing well. Welcome to another video. As you are well aware, if you follow this channel for quite some time, each month I share my public investment portfolio video where I update you in which stocks I'm buying currently. Full disclaimer, this is not investment advice. I'm just sharing what I'm doing so that in a few years I can look back, rewatch these videos and see, oh, this was the right decision, this was a horrible decision. I do me, you do you, don't trust a random guy here on YouTube. I find this entertaining, is also a good point of discussion with a lot of my friends. So here we are. I've uploaded the vlog yesterday, I still need to edit another vlog, edit this video. I'm using here a 5-minute break. Some people use coffee breaks on their work, I'm using it for, for this update on this portfolio. And I'll try to keep it fast paced and not speak super fast at the same time because some friends already called me out for that. I'm gonna open Trading 212 app, which is the platform that we've been using here on the channel since the beginning of the series. Sorry, I have here a bunch of things. Okay, so here we are. Portfolio right now, it's worth 2,154 euros. Total invested 1,800 euros. So we are with a return of 15%, more or less 15.11%. So roughly 282 euros. So if I were to sell all my positions in my stock portfolio right now, I would have this return. Here in Portugal, I would have to pay 28% in tax. So this is, take it as you please. We start this portfolio in January of 2022, as you can see here, and each month we'll be creating pies that has like a lot of stocks, and I'll show you the pie for this month in a bit. And here we are, like the performances. If I had invested all my money in the pie that I had created in 2022 in January, which had these current holdings, ETF of the S&P 500, ETF of information technology sector, Google, Amazon, Alibaba and Tencent, I would have a performance of 5%. But if I were to invest all my money in a single point in time in the past 2 years, let's say in August of 2023, the performance right now would be horrible, minus 13%. Because we have here really a bad position. I'll talk in a bit for Farfetch, which is 99% down. This is crazy. But here we are. This is something we invest a small amount in 2022. I started investing 40 euros per month, something a bit symbolic, like going for lunch out every week, and we invest in this. Here right now in 2023 we've been investing a bit more. We right now are contributing 120 euros per month, and I assume as I get older I get more work experience, so hopefully get salary revisions, I'll be able to contribute more to this portfolio. But I'm getting a bit out of topic, and we have here the other pies. So let's take a look how the portfolio overall is looking. Alibaba is down, our Chinese stock is down 15%. Google is up 34%, Amazon is up 55%, Farfetch is down 99%. And this is something, one of the advantages of being diversified. This was a really small position in my portfolio. I had invested in total more or less roughly 60 euros, and as you can see, at the time I invested it, I invested in a couple of months, it was spread out. The average price was 3 euros and 50 cents, and right now, per share, right now it's 3 cents. This is absolutely like mental. So imagine I had invested all my money on this, so this means those 1,871 euros right now, they would be essentially worthless. At the same time, we can pick a random stock here that's been performing really well. Imagine that I had invested all my money on Meta platforms, former Facebook, I would have a return of 143%. So I would have doubled or even more, 2.5 times my money. So you never know. You might be investing in the best timing ever or in the worst timing ever. My strategy here, this is since we have a long-term horizon, is so that when I am about to retire, hopefully I have invested when the market is at the top, or not hopefully, like, well, unfortunately I'll be investing when the market is at the top. Unfortunately, I'll be investing when it's at the bottom, when it's the best time to buy. I'm not a magician, whatever. I cannot perfectly time the market, so I'm happy if I can average out a good return. Maybe we'll beat the S&P 500, maybe not. There's only one way to find out, and that's gonna be future Pedro if I keep making these videos consistently every single month. So without any further ado, we can see here the allocation. So The majority of my portfolio is distributed into ETFs, so these major two positions are a basket of stocks essentially, not like Alphabet, not former Google, but it's Google, the company that owns Google essentially, and YouTube, the platform that I'm here recording this video. So you can see the third position, I am very exposed to this stock, so if Google would collapse out of a sudden I would lose 10% of my portfolio, and that would be a really big hit. So Farfetch represents it, even is not even included, it's on other here, so 0.32% of my portfolio, which I'm happy if the performance goes really well or really low. And this is also a good thing. When you are young, you can build your emotional tolerance when you're seeing these kind of fluctuations in your portfolio, because if you leave investing for when you're older and you have more cash in hand, it will be really hard for you to wake up one day and then, oh, minus 10%, and then the next day, plus 5%. So yeah, but this is just my take on this. Don't trust this random guy here on YouTube, and let's move on to the pies itself. We're already reaching here the closing on the 6th minute. I wanted to keep it under 5. I guess we're failing on that point. The holdings that I have selected for this month is going to be the S&P 500 ETF. The information technology. So this is a more focused ETF, and I already made a more in-depth video explaining what's inside of this asset. Alibaba, of course, because it's down, and I still believe on this company. JD.com was also down, and I'm doubling down on my position. S&P 500 overall, so this is like the most basket. I'm not having such a risk-on approach at the moment. Maybe I should focus on other companies, but since I have the lack of time at my present moment here, I will defend my thesis in 2 months. I've been having a lot of work and at my company, and so here we are. I'll have to stick with these investments for the sake of consistency and the dollar cost average strategy that I already made a video in depth, and you can see other videos on YouTube or read about it anyway. Walt Disney 10% and Vanguard another. This is a even more diversified ETF. So here we are, we're gonna invest in this pie. So here we are, 120 euros, and you can see here 12 euros going for Disney, 24 for Alibaba, 24 for the S&P 500, and so on and so forth. Confirm buy. And I already made videos how to create an account, how to deposit money, how this works. So you just follow this playlist, because more people lately have been more interested in entering on this space. So we have completed our transaction. It was super quick, and let's take a look how our portfolio right now is looking at. Well, naturally, you see the performance is not 15% anymore, it's 14% because I just made these purchases, and that's gonna lower because I bought these stocks at the current price right now, so they didn't have much time to go higher or lower, but here we are. If I had a lower price for some of these stocks, now they are higher because they are averaging out. And our portfolio is worth now 2,270 euros. Who would have thought? So I was only contributing 40 euros, and this only proves that if I were to invest 2,000 euros at the moment, I couldn't with my current finances. It would be a major blow, but by investing each month, I think, and phasing it out, it's much healthier. Of course, every person has a different strategy. I'm just sharing what I'm doing, and hopefully you will also enjoy this kind of content. Let me know if you want me to change something about this video. It's also really helpful to have that kind of feedback. And yeah, this is how it's looking, and our total allocation is more or less the same as it was before. Thank you all for watching, and I'll see you next time. Bye.